No doubt profit is key, but cash is king. And the objective that you've got is to have more cash. But how do you do that? Cash flow is the lifeblood of your business and needs to be taken seriously. Positive cash flow is where cash inflows are greater than cash outflows for a period of time. Cash deficit, on the other hand, is the opposite. Think cash deficit only happens when you're not succeeding? Even a profitable business can fail if cash flow is unbalanced and lacking in surplus cash. To make sure you have enough surplus cash, you need to understand how to read and navigate your profit and loss statement. You also need to know how to see the most out of a cash flow forecast. As an accountant, I get asked a lot about profit and loss statements all the time by cafe owners because they don't understand why what appears as a profit is not what they see in their bank. Now, the easiest way for me to explain it is if I pull something up and we go through an example. Let's do that now. So I'm gonna run through an example that's from my book, Count More Beans, and it's on page 35. So if you've got the book, you can always go back to that page and reference what's going on. Now, Kate, for example, runs a profitable coffee cart business. She's built this business from scratch. She's got 3 carts, 2 are at fixed locations, and the other one's mobile. So you'd like to think that she's got a pretty diverse business, and it's also a little bit capital intensive. The inflow of cash for Kate comes from coffee sales. I mean, that's pretty simple. Cash outflows for Kate are normally done through a couple of ways. She pays for finance repayments for her vehicle, she's got a trailer, and she's got to get her mobile cart around. Kate also has a personal loan repayment that she's got to make on $40,000 that a bank lent to her to buy the carts and the equipment. So, she's got a lot of moving parts. What I want to explain here is, not everything that she pays for is going to be affecting profit. So, she's got additional operating expenses like rent to secure these fixed locations. She's got to pay wages to employees that are at different carts because she doesn't want to work at all 3 carts at the same time. I don't know how you could. But of course, she buys milk, coffee, cakes, cups. Now, Kate's business makes $10,000 profit, and we can see that on the left-hand side. What I'm trying to explain here is if we look at the left-hand side of these 2 reports, they're 2 different reports. We've got a profit and loss on the left-hand side and a cash flow statement on the right. The profit and loss is pretty simple. It explains profit or loss and sales coming in, expenses going out, and what's left over being either that profit or loss. On the right-hand side, we've got something called a cash flow statement. Now that's very different to a profit and loss because what that does is report on all the money that came in, the cash inflows, and all the money that went out, the cash outflows. And that will give full clarity in terms of reporting because it tells you everything that went out, not just what went out of the bank account or the credit cards that was on the profit and loss. Now, coming back to Kate, she's made $10,000 profit, but she doesn't have $10,000 of net cash flow. She's got only $4,800. And the question is, well, why is that? So for example, the loan and the finance lease repayments that Kate makes, they're not in her expenses. That's $5,200. So her bank account's affected. So at the end of the month, cash is only $4,800, but profit's $10,000. And when Kate looks at her bank account, she's going to only see a movement of $4,800 instead of 10, which is what she would have expected if she just relied on her profit. What I'm hoping that you can see from this example is that there's a very big difference between what shows up on the profit and loss statement and what ends up in your bank account. And sometimes it's just a couple of things that can make that difference. Now, being a business advisor and a business owner and an accountant, my aim is to run a business profitably. And my job is to help others do the same. But, the most important thing is to run a business which always has cash and has more cash and has sustainable cash that we can see out into the future. That gives us clarity, that gives us the ability to make more choices, and that allows us to succeed in biz. So don't just focus on profit, but focus on cash. Focus on increasing your cash. Focus on having more cash. If you like what you're hearing, if you love what you're seeing, please share, like, subscribe, Hit me up if you need any help with your cash flow. I'm Nadi Elias. This is the Daily Espresso. Get cracking.